The DRC's fintech sector is growing with a 5% rise in mobile money users in the first quarter of 2024 and a $62 million raised in startup funding in 2023. Despite this, 80% of the population remains unbanked due to low internet and infrastructure challenges. While still in its early stages compared to markets such as Kenya and Nigeria, the DRC's fintech sector shows significant potential. For more insights, we spoke to Rocky Abdoul Milingita, digital financial services consultant at Microsafe Consulting.
Fintech ecosystem in the DRC has experienced significant growth in recent years, driven by the need for financial inclusion and the rapid adoption of mobile technology. This was more trained by mobile money expansion, which has been a booming tool for financial inclusion in the DRC. So mobile services saw for instance, for the Q1 2024, saw a 5% increase in the number of active users. And also the revenue also followed this trend. There is also the fintech startups, because there has been a surge of fintech startup focusing on payment, lending, and microfinance solutions. So these startups leverage mobile platform to offer services like payment aggregation, microloan, savings, and insurance. There is also a regulator support, because the Central Bank of Congo has introduced regulations to support electronic payment and encourage innovation in the financial sector. Early this month, the Central Bank issued Instruction 58 on the interoperability of electronic payment system and participation in the national suite. So this regulation established guidelines for payment interoperability, which is also beneficial for fintechs, as they are already recognized as institutions subject to this instruction. Thank you.
And support from the Central Bank of Congo is very important when it comes to deepening the fintech services in the country. But let us look at some of the challenges that still remain and also how to navigate them.
So actually, there are a lot of challenges that are primary challenges faced by fintech in the DRC. First of all, there is the infrastructure limitation, because actually only 19% of the population had access to electricity. This limits really the use of electronic services. There is also a challenge related to low internet penetration. So the internet penetration actually stands approximately at 70%, which also limited the access to online fintech services. So also there is a low mobile network coverage. In other countries, the low internet penetration is mitigated by alternative solutions, such as the use of USSD technology. However, in the DRC, there are regions where even USSD access is unavailable. There is also a problem related to financial literacy. There is a lack of understanding of digital financial products that reduces the adoption rates among potential users. There is also a challenge related to the trust issues, because in some regions of the DRC, the population has been exploited by so-called digital investment platforms, which have fraudulently taken large amount of money and vanished, leaving the population uncertain about where to seek help. This also reduced the trust in digital platforms. The last one is more regarding the regulatory barriers, because there is the complexity and the length processes of granting authorizations to fintech that create barriers to entry, and also the expansion of fintech companies.
And Rocky, that's quite a big number you've mentioned there, looking at some of those challenges, but there is also an 80% number that you're seeing that is still unbanked in DRC. So how do we see fintech transforming the financial sector here?
First of all, is more to leverage about some customer-centered design products, because we noticed that more products that are developed by bank are not more client-centric. And here, fintechs are more leveraging this gap by providing solutions that are more customer-centric. And also, it's more about the prices, because FinTechs came with some solutions that are low cost for the population and are more suitable for the population. This make FinTech to coverage this gap, but also there is a trend actually in DRC where there are some partnership between classic financial institution with FinTech to see how to make this partnership and to see how they can reach more population on the last miles, and also to increase this financial inclusion rate.
Let us also look at some of the subsectors that you're seeing that are attracting highest level of investment from investors, and also what makes them particularly appealing to investors in the DRC.
So first of all, I would like to mention that in 2023, the DRC raised more than 62 million in startup funds, making also a single largest contributor to startup funding growth, about 33% year on year in the Central Africa region. And also, if we have to talk about securing financing, we have those that are more both for local and international investors are showing the increase in interest in the DRC fintech sectors. And also there is also one component more related on challenges organized by financial institutions like EcoBank, where there are some findings in kind of prices, winning prices that fintechs also are relying on to get more funds. But there are also some development funds, for instance, from IFC and African Development Bank to provide more funding and support to fintech ecosystem. But also there are some partnerships also which are collaboration with the telecommunication companies and banks that offer financial and infrastructural support to financial technology, fintechs.
And looking ahead, what are some of the emerging trends you're seeing in the fintech space in the DRC, and also maybe some of the policy shifts that you're seeing, looking at the investors that are coming in, the regulatory landscape in the country at the same time? What are we seeing here?
Yes, the business environment in DRC is improving because of the more of policies that are being promulgated in DRC to see how they can be more business, and also to see how they can support fintechs. But there is some trends that are more related to digital financial expression, because traditional banks are likely to collaborate more with fintechs to offer these digital services in DRC, because some 5 or 10 years ago, there was a lack of competition, and there was no room for collaboration between the digital, financial institutions and fintech. There's also this regulatory evolution, because the government now introduced more supportive regulation, including sandbox to foster innovation. And also, as I said, there is the instruction that was published yearly this month, the 58 instruction, which is more about the interoperability and bring all digital finance actors on a table to discuss, but also to be linked to see how to improve the financial inclusion. There is also more trend regarding the technology adoption, because there is this increased use of smartphone, also the improved internet connectivity, which enhance also the reach of fintech services. But also there is more focus on fraud and cybersecurity, because as digital services expand, also there will be a greater emphasis on this securing platform against fraud and cyber threats.